Hello guys, this is Rosnowski from our Profit Hub Singers. Today I will be making this video to show you guys how to analyze your charts and how to understand and use the market structure in your analysis of your charts. So without further ado, let's get started. Alright, the market structure. Before we start, you need to understand that before you place any order or any trade at all on your MetaTrader application, you need to understand the market structure. You need to know what the candlesticks are telling you. You need to know who is in control of the market. Is it the buyers or the sellers? And your ability to read the charts, to analyze the market, will improve your trading skills. So I want you to have this in mind as we go on in this video. Alright, one of the most important skills that you need as a trader is the ability to read the market structure. It is a critical skill that will allow you to use the right price action strategies in the right market condition. You are not going to trade all the markets the same way. You need to study how the markets move and how traders behave in the market. The market structure is the study of the market behavior. So basically, understanding how the market works, understanding the market structure, having the ability to read the markets is a critical skill for any professional trader. It will help you to able to use the right price action strategies in the right market condition. So you need to understand the market structure to know and understand how the market moves, how other traders behave in the market, and the levels at which you will enter the trade or exit the trade will be based on your understanding of the market structure. Alright, let's proceed. If you can master this skill when you open your charts, you will be able to answer these important questions: what the crowds are doing, who is in control of the market, buyers or sellers, what is the right time and place to enter or to exit the market, and when you need to stay away. So having a knowledge of the market structure will help you understand what other traders are doing. Are they selling or are they buying, or are they waiting? So knowing the market structure and understanding what the market structure is telling you will help you know what other traders are doing at the moment. It will also help you know who has control over the market. Is it buyers or the sellers? In a market where buyers are in control, where buyers have the momentum, it will be foolish of us to place a sell order in such markets. Obviously, because we will just be throwing away our money to the broker. And in the same way, in a selling market, in a downtrend where sellers have control, where sellers have the momentum, it will be foolish of us to be looking for buying opportunities in such a market, because obviously sellers are in control of this market and we should be looking for selling opportunities instead. Also, having the right knowledge of market structure will help us know, will help us time our entries in the market, so that we won't need to waste our money or stay long in the market. Also, having this knowledge will help us determine when to exit the market and when to stay away from the market, because obviously not all markets are worth trading. There are some markets where you just need to observe. Let the market tell you what it's doing. Just observe what the market is doing. Observe what other traders are doing. Just let the market and wait for the perfect setup. You don't always have to trade all the time. This is what you newbies should understand. You do not have to trade all the time. You do not have to catch all the pips in the market all the time. Just wait for the perfect setup and let your strategy confirm before you enter. So let's proceed, guys. Through your price action analysis, you will experience three types of markets: trending markets, ranging markets, and choppy markets. Let me highlight this for you guys: trending markets, ranging markets, and choppy markets. Obviously, as you can see, there are three types of markets that we will encounter on the charts, and there will be different approaches to these markets. Obviously, you won't want to trade the same way you trade on the trending markets. You won't want to do the same on a ranging market or a choppy market. Otherwise, you will lose your trade. So having this understanding of the market structure will help us know how to trade a trending market, how to trade a ranging market, and how to trade a choppy market. And it will help us identify these markets, as we will see soon. Okay, let's proceed. In this chapter, you will learn how to identify every market and how to trade it. So let's talk about trending markets first. Trending markets. So trending markets are simply characterized by a repeating pattern of higher highs and higher low in an uptrending market, and lower high and lower low in a downtrending market. So what this simply means is, in a trending market, especially in an uptrend market, a bullish market, a market where buyers are in control, we have a series of repeating patterns of higher highs and higher low. Hang on, guys, let me show you an example of this on the charts. So as you can see here, this is an uptrend. This is a uptrend, a bullish market, and as you can see, the price went up to form a higher high, HH, then I'll retrace the little to form a higher low, then went up again to form a higher high, then retrace the little to form a higher low, went up again to form a higher high, retrace the little to form a higher low, and kept on doing the same thing in a series. So once you see this kind of setup, just know that this is an uptrend. As you can see, it's very clear, it is an uptrend. And in this type of markets, we will be looking for buying opportunities, because we know that buyers are in control of this market. I hope it's easy to understand. In a bullish market, in an uptrend, we always look for a buying opportunity. Okay, let's go back to I demonstrated to you how to identify an uptrend, and I've shown you the higher highs and higher lows that make up our uptrend. So now let's see on the charts in a downtrend the lower highs and lower lows. Hang on guys, let me fire up the charts to show you. Alright, here on the chart is a downtrend. So obviously, as you can see, sorry guys, okay, let me highlight it for you. It's a downtrend, as you can see. So what happens here is price goes down to form a lower low, then it makes a little retracement to the upside to form a lower high, then makes the major move or impulsive move to form a lower low, then does a little retracement to form a lower high, then goes down again to form a lower low, then makes a little retracement to the upside to form a lower high, and again it makes a downtrend to form a lower low. So when you see this sort of setup in your charts, on your charts, just know that this is a downtrend, a bearish market. Sellers are in control of this market, and in this market we will be wise to be looking for selling opportunities, because obviously it's a downtrend, it's a bearish market, and the sellers have the momentums, so we'll be looking for a selling opportunity. I hope this is clear. So let's go back to our article. Alright, we already talked about how to identify a downtrend and uptrend, and I've shown you the several levels on the uptrend markets, the higher highs and the higher low, and the lower high and the lower lows in a downtrending market. Now let's see an example of this, although I've already shown you, but let's see an example. Here is an uptrend, it's an example of an uptrend, and as the price goes up, sorry guys, let me take this off screen. Okay, so as the price goes up, it forms a higher high, and then it makes a little retracement downwards to form a higher low. It makes another movement upwards to form a higher high, then makes another movement downwards to form a higher low, and then this series keeps on repeating itself. It's a pattern, and as you can see, obviously the price is going up, so this series keeps on repeating itself. So once you see this on your chart, just know that this is an uptrend, a bullish market, and buyers are in control, and what we are looking for here is to buy. So we buy and buy hard. I hope this is clear. I can't say more than this. It should be understandable. So let's move on. As you can see in the example above, the market is making series of higher highs and higher lows, which indicates that the market is uptrending. Like I said earlier, you don't need indicators to decide if it is bullish or bearish. Just a visual observation of price action is quite enough to get an idea about the market trend. So obviously, I've already told you, uh, you just need to look at your charts and observe for higher highs and higher lows, higher highs and higher lows. If it makes a pattern of higher highs and higher lows, and the price is moving up, obviously, you know it is a bullish market, a market that is an uptrend, and we will be looking for buying opportunities. So let's move on. Another example here is an example of a downtrend market, and here the market is making a series of lower highs and lower lows, lower highs and lower lows. So when you see this, obviously it's a downtrend market or a bearish market, which means that sellers are in control, sellers have the momentum, and we will be wise to look for selling opportunities in this type of market. Alright, the example above shows a bearish market. As you can see, there are a series of higher lows and lower lows, which indicate an obvious downtrend. Trending markets are easy to identify. Don't try to complicate your analysis. Use your brain and see what the market is doing. Like I've told you earlier, it's just easy. It's an easy thing to identify. As you can see, I've already demonstrated to you. If it's making series of higher highs and higher low, it's just an uptrend market, and we'll be looking for buy opportunities. And if it's making series of lower highs and lower lows, it is obviously a downtrend market. And most of the time, or let's just say, okay, 30% of the time, the market is trending. So you have to know how to take advantage of these situations, because this is where we make our money on crash and boom in this. And I've used my knowledge of trending markets to make a lot from trading on crash and boom. Alright, let's move on. To determine whether a market is trending or not, you have to use bigger time frames, such as the 4-hour, the daily, or the weekly time frame. Never try to use smaller time frames to determine the market structure. Guys, I know some people, some newbies, all the analysis they do is just on the 1 minute time frame or the 5 minutes time frame. They never go on the higher time frames or to do any type of analysis. See if don't copy those kind of traders. They will end up losing all of their money, because if you analyze on the smaller time frames, you have false signals, and once you have false signals in these markets, you are just throwing away your money. You are throwing your money to the broker, and they will take from you. So whenever you want to analyze markets for the structure, to know the trend of the market, just go to the higher time frames, like the 1 hour, the 4 hours, the daily or the weekly time frame, and just check if it's making a series of higher highs, higher lows. If you see this, then you know it's an uptrend. And if it's making a series of lower lows and lower highs, then you know it's a downtrend. And in a downtrend market, you will be looking for selling opportunities so as to milk the market. I think I should be ending the video here. It's longer than I anticipated, but I hope you guys already understood a little market structure from this video. And if you have any questions, you can just contact me on Telegram. I'll be dropping my contacts in the description box, so you can reach me on Telegram. I also have a signals channel on Telegram, so you are free to join the group. There I drop many trading materials, ebooks and strategies. So also be dropping the link to the Telegram channel on in the description box. So if you're interested, you can just join the group, and if you have any questions, you can contact me on Telegram as well. So I encourage you guys to keep learning about trading. It's a skill that is very profitable. If you are able to master this skill, you make a lot of money, I can assure you. So I'll be ending the video here, and on the next video we'll be talking about how to trade trending markets. So I'll be showing you guys how to trade trending markets. Just watch out for that video. So I'll see you on the next one. Thank you for watching.